Welcome back to the Malaysia Money Matters show. It's the 29th of January 26. We've got a really full slate today. We're going to run down some of the big Malaysian corporate shakers and then pivot to some pretty significant international and political updates.
And looking at the Malaysian side, there's a clear theme right out of the gate: infrastructure.
Absolutely. You see it straight away with ISF Group. They debuted on the ACE market today.
And what a debut! Opened at 50 sen.
I mean, that's way above their 33 sen IPO price for a piping firm.
Exactly. It's not flashy tech, but it just shows you how hungry investors are for these, solid industrial infrastructure plays.
It feels like the same story with Kinergy advancement in a way.
Well, yes. They just sold a 49% stake in their Perlis gas turbine project
To Thailand's B.Grimm Power for over 41 million ringgit. So this is a strategic move, right? They're shifting from just being a contractor
to an asset owner. It completely changes the game. You're not just hunting for the next project anymore.
You're getting recurring income.
You're getting those steady, recurring checks. It's all about stability.
And that idea, that recurring income narrative, it seems to be driving the property sector too.
It is. You've got CapitaLand Malaysia Trust, IGB REIT, IGB Commercial REIT. All of them are posting double-digit growth in income.
So retail's holding up.
Retail is surprisingly resilient, but the really fascinating part is the strategy shift. CapitaLand isn't just buying more malls.
Right, they're expanding
aggressively into logistics and industrial assets. It's a smart diversification.
Speaking of solid performers, YTL Corp and YTL Power got some good news.
Oh, yeah, big upgrade. Bumped to AAA rating from RAM ratings.
Which is pretty much the gold standard.
It is. It tells you their power and water businesses are basically cash machines, strengthening that balance sheet.
Okay, so it's not all good news. KJTS Group, for instance, hit a one-year low.
A pretty bad one. It triggered a suspension in short selling.
But I want to talk about Malaco Mining. They're partnering with a French firm, Carastet.
Right, to build a rare earth pilot plant. And, importantly, using local feedstock.
So why is this specific partnership such a big deal? Is it just about a new plant?
No, it's much bigger than that. For decades, Malaysia has, just dug resources out of the ground and shipped them away raw.
We export the raw material.
Exactly. This is about finally doing the high-value downstream processing here. It's about capturing more of the value chain instead of just selling the dirt.
Let's move across the border then. If you've got money in Jakarta, today was rough.
Rough is an understatement. The market plunged over 7%.
Wow. And that's because MSCI, the index provider, put out a warning.
Yeah, they warned about investability issues, which is, polite banker speak for we don't trust the setup.
So liquidity, governance, that kind of thing.
Basically, big funds are worried about getting their money in and out easily, but there's a silver lining here for us.
You think so?
Well, foreign funds still need Southeast Asia exposure. If Jakarta looks risky, Kuala Lumpur suddenly looks like a much safer bet. We could see some of that money get diverted here.
So while foreign money might be coming in, are we actually saving enough of our own? I saw a PNB research report that was pretty sobering.
It's a major wake-up call. It says Malaysians are aging faster than they're saving. We are genuinely facing a future where many people could retire into poverty.
So what's the solution?
The report suggests we need a fundamental policy shift. Move away from temporary subsidies and start creating real lifetime financial security.
Speaking of government policy, enforcement seems to be the word of the day.
Definitely. The MACC has arrested 5 more people linked to that Navy LCS scandal.
And that project is delayed yet again, now to December 2026.
But the crackdown that's going to affect more people is happening at the petrol pump. From April 1st, it's not just the station operators in trouble for selling RN95 to foreign cars.
They're going after the drivers themselves.
The purchasers, exactly. If you're in a foreign-registered vehicle buying subsidized petrol, you're the one who will be held liable. It's a huge step in plugging that subsidy leakage.
Seems like a bad day to be on the wrong side of the law. I see bailiffs were at Jamal Yunus's home today as well.
Right, to seize assets, to cover the damages he owes to Teresa Koch. Enforcement is definitely the key word.
Okay, let's quickly wrap with the global picture. Gold hit a record high.
Above 5,300 US dollars. That's largely because Donald Trump hinted he's okay with a weaker dollar.
And on the other end of the spectrum, you have tech just flying. SoftBank is looking to put $30 billion into OpenAI.
And ASML shares are soaring because of AI chip demand. Even China just approved its tech giants to buy certain NVIDIA chips. It's fear and greed, both at full throttle.
It has certainly been a day of massive market movements and much stricter local enforcement.
That sums it up perfectly.
That's the landscape for today. Subscribe to the Malaysia Money Matters podcast so you won't miss out. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.